Hello, everybody. This is Yevgen Pitelman, Coldwell Banker Real Estate, and today's video dedicated specifically for mortgage market updates. And for this purpose, I invited our wonderful team member, our mortgage professional, expert in all things finance, Sal Tomaselli, and he will explain us what is that most important is happening on the market and what's the underlying condition that drives the market today. So thank you very much for joining us today.
Thanks, Eugene.
Let's dive right into it.
Okay, so I want to thank you first of all for having me on today. I'm very proud to partner with Coldwell Banker and your office and your team. And so I'll start by giving you a little information about myself. I'm in the mortgage business about 35 years. So I've seen many cycles, the ups, the downs, and all different aspects of the mortgage business, the various crashes that took place and the various, very exciting good times. It's an interesting business in that banking is very interesting because the fundamentals pretty much stay the same. That the lenders are looking at ways to secure their position to make sure that they lend money to people that are going to pay them back, basically. And so there are guidelines in place that have been set forth by the federal government that most banks follow. And there's a reason why they do that. They do that because that ensures that if a loan doesn't go through or defaults, that there's a recourse for the bank. Sorry, excuse me. And there's a recourse for the bank to basically get their there's recourse for them to get their money back or protect their position on the property. So that's basically what's involved with it. But it's a very exciting business. Obviously, right now rates have gone up. There's been some federal tightening in the market. So we have a weekly newsletter that we send out, and right now the rate is somewhere in the mid-sevens for a 30-year fixed rate mortgage, which is significantly higher than what we've had in the last couple of years. We had rates down as low as 2% and 3%. However, we anticipate that this will change relatively soon. But it is the market, and it's the market that we have to deal with. So that's it. I hope that answers your question.
I got you. Thank you very much. Tell me, please, when you say this is going to happen soon, does that mean that it's going to go up again more or going down, and when exactly this is going to happen? I actually wanted to ask you, as far as predictions for the rates,
Okay.
I hear completely different points of view. Some people trying to see and tell me, okay, I'm not going to sell, I'm not going to buy until the rate goes down. But some people in professional circles, they say it's impossible, absolutely impossible to predict when the rates or where the rates actually going to go. So what is your, what do you say on that? What are your opinion on that, on predictions?
Well, what I'm telling all my clients at this point is that, I think at the end of the day, if you look at a real estate chart as to values, especially in the New York market, it's always kind of in an upward trajectory. Okay, so there's little pullbacks. However, if you look at a chart over the last 30 years, for example, it's always in an upward, moving upward. Okay, as far as predicting when the rates will come down, right now we have evidence, in the economy that the tightening has, inflation seems to be easing a little bit at this point. And because inflation is easing, the Fed has chosen not to raise rates in the last session that they just had. They decided to keep the rates the same. And that's probably going to, continue more than likely. It doesn't seem that it's going to be warranted that there'll be another rate hike. If there is another rate hike, it'll probably be the last one, and they will probably hold on at that point, and then we'll start to see some easing. So all indicators are showing that inflation is slowing down, and because of that, at this point in time, it seems like they're going to probably lower rates. What I'm telling clients is not to make their decision to buy a home or not to buy a home based on the interest rate, because inevitably what will happen is although rates will continue to go, will may go down or may go up, but more than likely go down. We know one thing for sure is rents have gone up significantly, and when rents go up, real estate values also go up. So we anticipate that real estate values will continue to rise, okay? And it's really critical as a buyer for you to get in, to the marketplace as quickly as possible. If you're ready now to buy a home, I would suggest buying it as long as you could afford it, obviously. And then there are many benefits down the line. When rates do get reduced, there'll be an opportunity to refinance. And I've been through many of these cycles, and so I've had clients that now that are closing in the 7s and 8, 7%, 7.5%. I'm pretty confident that when the rates drop down to 5 and 5.5 and 6%, when they refinance, there's gonna be a windfall of savings. They're gonna save hundreds and hundreds of dollars per month on their mortgage. So life will get easier. Okay.
Hopefully, yeah.
So if you could afford it now at 7.5, you can most certainly afford it at 5.5%. And then we know that the trend is that more than likely values are going to continue to rise. Okay, so I think when rates drop again in the next year or two, what you'll see is a corresponding increase in values. So I'm telling most people that it really makes sense to buy now, because whatever you feel you're losing on the interest rate side of things,
Right.
You're really going to gain in the equity side on the value of your property.
I got you. Okay, thank you very much for all these insights and information. I do hope we're going to see you soon with the next market updates. And thank you. And then everybody who's watching this, if you have any questions for me or for Sal, or you want to know more about what's happening, or you actually interested in working with us, all the information is below. Please feel free to reach out to us anytime. Thank you. Have a good day, everybody.
Thanks. Take care. Thank you, Eugene.